Hi traders, you're welcome back to the Forex Geek channel. In this channel, we break down powerful trading strategies to help you master the markets. Okay, now in this video, we're just going to be talking about one of the most underrated yet powerful trading combinations, and that is the moving averages with volume. Okay, so if you are struggling with false signals or you are unsure when a trend is truly strong, then this strategy will help you to make more informed decisions in your trades. Okay, so make sure to smash that like button and subscribe if you want more expert breakdowns like this. Now let's just quickly get into it. First of all, let's quickly go over what a moving average is. Now, a moving average is a technical indicator that smooths out price fluctuations, all right, over a specific period, helping traders identify trends more clearly. Now, there are different types of moving averages. Actually, there are different types, but on the MetaTrader terminal, on the MetaTrader platform, the options available are the simple moving average, the exponential moving average, the smooth moving average, and the linear weighted moving average. Now, the simple moving average is basically, you know, the simplest moving average. The name implies its simplicity, right? It's a basic average of prices over a set period. Then the exponential moving average gives more weight to recent price data, making it more responsive, while the weighted moving average is similar to the EMA but with different weighting methods. Now, traders often use moving averages to determine trend direction. If price is above the moving average, it signals an uptrend. It's as easy as that, right? Then if the price is below the moving average, it signals a downtrend. But here's the problem. Moving averages alone can sometimes give false signals. Now that is the problem, especially during sideways market. That's where volume comes in. Now volume tells us how strong a move really is, and for that purpose, I'm going to be adding the volumes indicator to the chart. Volume tells us how strong a move really is. Think of it like this: if price breaks above a moving average but with low volume, it's like a weak push. The move may not last, but if price moves above a moving average with high volume, that's like a strong push, making it a more reliable signal. Now here's the key rule: if price crosses above a moving average with increasing volume, the uptrend is likely strong. If price crosses below a moving average with rising volume, the downtrend is gaining momentum. And finally, if volume stays low during a crossover, be cautious because it could be a false breakout. Now let us put this into action. Okay, here's a step-by-step method to use moving averages with volume effectively. Okay, the first thing you should do is to choose a moving average. All right, you can actually use different periods for your moving average, but it depends on your trading style, right? Now for the purpose of this video, I'm going to be using the 50 EMA. Okay, it is great for identifying medium-term trends. You can also use the 200 EMA if you are a swing trader that prefers long-term trends. All right, then you have to watch for crossovers. Okay, watch for price crossovers. When price crosses above or below the moving average, it signals a potential trend shift. Then you ought to check the volume. All right, if the volume is increasing as price crosses, it confirms the move and adds credibility. After that, just watch out for candlestick confirmations. Okay, Strong bullish or bearish candles with high volume confirm that momentum is behind the move. And finally, avoid low volume crossovers. Okay, if price crosses a moving average but volume is low, it's better to wait for more confirmation. It's very, very important. Now, this combination can be used in Forex, stocks, and even crypto trading to filter out weak signals and focus on stronger trend moves. All right. Now, let's just quickly break it down with a real chart example, right? I want to look for a good example. Okay, for example, we can see that here the price crossed above the 50 EMA, but notice the volume. Notice the volume. Notice the volume. You can see that gradually the volume increased, and you can see how that move continued all the way up to this point until it got to this resistance zone. Now, let's look for another example. Let's look for another example. We can see here the price crossed above the moving average, but the volume stayed low. And what happened next? The price faked out and dropped back down. Can you see that? So, this is the power of combining moving averages with volume. It helps you to filter out bad trades and focus on high probability setups. So now you know, using moving averages with volume can actually help you avoid false signals and improve your decision making in trading. All right. Now, let's just quickly talk about risk management. Okay, risk management is necessary irrespective of the strategy that you are using. When you want to enter a trade, ensure that you don't risk more than 1 to 2% of your trading capital in a particular trade, okay, of your account balance. Don't risk more than 2% of your account balance in a single trade, and observe good risk to reward ratio. Okay, if you're risking $10, for example, your minimum profit target should be at least $20. That's going to be times 2 of your risk, right? That's going to be a risk to reward ratio of 1 to 2. Risk 1 ratio 2. Okay, risk 1, reward 2. So if you are risking $1, your potential profit target should be $2. If you are risking $10, your potential profit target should be $20. In some kind of strategies, you might have a risk to reward ratio of 1 to 1.5. That's if you're risking $10, you'll be targeting $15 minimum. It doesn't mean that you can't get times 5 or times 10, right? It depends on market condition. Okay, but for the purpose of risk management, just ensure that your risk is always bigger than ensure that your reward, your potential reward, is always bigger than your risk by at least times 2. Then worst case scenario times 1.5. Okay, so if you found this strategy useful, hit that like button so more traders can see this. And if you're new to the channel, subscribe now for more trading insights and breakdowns like this. Also, drop a comment below. Do you use volume in your trading? If not, are you going to start? I'd love to hear your thoughts. In the meantime, thank you for watching, and I look forward to seeing you in the next video.